You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Have you ever felt like the global news cycle is just relentless? It's like a constant torrent. One minute you're trying to get your head around, say, central bank policy. The next is a sudden swing in commodity prices, or maybe some geopolitical flashpoint erupting miles away. Honestly, keeping up can feel like a full-time job, right? And often, you just want to know what actually matters here. Okay, let's unpack this. Our mission today is, well, to cut through some of that noise. We've taken a real deep dive into a stack of the latest global market and news briefings. We're like FX, commodities, trade, geopolitics, the works. And we're here to kind of distill it down, connect those dots that might seem unrelated, and give you those crucial nuggets of knowledge, the insights you actually need to feel properly informed. Think of this as your shortcut to understanding the why behind the headlines.
And that why is so critical right now, maybe more than ever. We're dealing with an incredibly complex interconnected global landscape. Every headline, every little policy tweak, every market twitch, it's all part of this huge, constantly shifting puzzle. So yeah, our goal isn't just reporting what happened, it's helping you grasp the forces behind it, the implications. Because that's where the real insight is, for making genuinely informed decisions.
Absolutely. So let's kick off with a broad look. What's the general vibe in the markets right now? And the word that keeps coming up is caution. Real palpable caution. What's creating the most buzz? And maybe a bit of anxiety. It seems to be three big things coming up. We've got the U.S. Consumer Price Index, the CPI report. Then there's the European Central Bank, the ECB, with their policy announcement. And fresh updates from OPEC. These aren't just calendar dates, are they? They feel like real potential market flashpoints.
Oh, definitely. Those specific events are exactly why you're seeing traders, investors, everyone really pulling back a bit, being cautious. Take that US CPI report. The consensus, I think, is calling for a steady 0.3% core month-on-month reading.
Yeah, that's the number floating around.
Right, but traders aren't just looking for that number. They're digging into every decimal point, looking for any surprise, anything that hints inflation trends might be shifting. I mean, a hotter number could really spark some aggressive dollar buying, right? Signaling the Fed stays hawkish. But a softer one, that could force a big rethink on rate expectations. And that affects, well, everything. Equities, commodities, you name it.
Okay, so speaking of currencies then, let's dive into the FX market specifically. We are seeing the dollar index firming up, actually getting pretty close to that 98 level.
Yeah, that's a key psychological point, isn't it? Haven't seen that in months.
Exactly. And it feels like people are just positioning themselves ahead of that CPI data drop. Meanwhile, the euro, well, it's looking a bit subdued, trading just under 1.1C.
That's a critical support level if that breaks.
Could signal a bigger downward move, yeah. Everyone's waiting on the ECB later today. Now, the expectation is a rate hold, right? Deposit rate staying at 2%.
That's baked in, yes. Widely expected.
So what are you really watching for in their forward guidance? Is there maybe a risk they surprise us with something a bit more hawkish? Could that catch markets out?
That's the crucial part. Forget the rate hold for a second that's priced in. The real meat is going to be in their updated inflation forecasts, especially for 2025, 2026. And, crucially, their forward guidance. Their language about the future policy path. Any subtle shift there in the words or the projections could signal they're thinking about tightening earlier or maybe later than the market currently thinks. And back to the US CPI, if it does land at that 0.3% core month on month, well, that likely just reinforces the dollar's strength. It suggests inflation stability, which probably keeps the Fed on its current path, supports the greenback.
Right, okay. So, dollar firming, euro subdued. What about other major currencies? How are they reacting in this kind of cautious mood? We're also seeing the Japanese yen under, well, noticeable pressure. USD/JPY is climbing, just shy of 148.000. Seems like its vulnerability to political uncertainty is showing again as traders try to figure out what that means for the Bank of Japan's tightening path.
It's always sensitive, the yen.
And sterling, it's a little softer, but it's holding above 1.35. Kind of treading water, really. Not much UK macro news. And the Aussies and Kiwi dollars, marginally weaker too. Seems like overall risk sentiment is just capped by all this caution.
The yen's pressure, especially with political uncertainty in the mix, it's not just general risk aversion. It really shows how deeply market confidence is linked to, well, governmental stability sometimes. It's a reminder that political drama can sometimes move a currency more immediately than even, say, interest rate differentials.
That's a good point.
And what's quite telling on a broader scale is the People's Bank of China, the PBoC. They set their daily USD-CNY fixing stronger than expected. Now, that's not just a technical adjustment. It feels like a clear signal. They're trying to stabilize the yuan.
Which is globally important.
Hugely important. Given China's massive role in trade and its economy, a stable yuan actually helps calm broader market nerves, shows they want to avoid more volatility.
Okay, let's shift gears. Let's turn our attention over to commodities. Crude oil prices seem to be consolidating a bit after those recent gains.
Taking a breather.
Those earlier increases were mostly put down to geopolitical risk, right?
Mm-hmm.
Eastern Europe, Middle East.
Yeah.
Well, we'll dig into that more shortly.
Yeah.
But on the demand side, the International Energy Agency, the IEA, they actually raised their 2025 global oil demand growth forecast up to 740,000 barrels per day. Kept 2026 steady, though.
Right. And what's really insightful there, I think, is this kind of counter-narrative emerging in crude. You've got this broader macro caution, worries about global growth. But then you have the IEA's bullish forecast and reports that Saudi Aramco asked buyers to take more October oil after some deeper-than-expected price cuts.
Suggests confidence in demand.
Exactly. It suggests a surprisingly resilient, almost defiant underlying global demand. It's not just about recovery anymore. It points to this kind of foundational energy appetite that's just holding firm even while other sectors look a bit shaky, creates a strong floor for prices. It really speaks to how essential oil still is, makes it maybe less reactive to general risk aversion than some other assets.
Interesting. Okay, what about gold? It was hitting record highs earlier this week. Now it seems to be taking a bit of a breather, trading just below $3,650 an ounce. Investors kind of holding their breath for that US CPI print, perhaps.
Precisely.
And copper also eased back a bit from that big $10,000 per ton test it had on Wednesday.
Yeah. These moves in commodities, they're like a great barometer for global risk appetite and expectations around inflation data. Gold pausing. Yeah. That directly reflects the market waiting for the CPI numbers. Gold tends to rally on inflation fears or geopolitical uncertainty rate, but it steps back when people are waiting for clarity.
Makes sense.
And copper, often called Dr. Copper because it's seen as an economic bellwether due to all its industrial uses.
Right.
Easing back from those highs suggests a bit of a cooling in risk sentiment as we head into these big central bank and inflation events. It's like the whole market is just holding its breath.
Yeah, you really get that feeling. Okay, let's shift again. Let's look at some pretty significant developments in global trade and policy. Nations are making some specific, quite impactful moves, reshaping economic alliances, putting up barriers. So what does this all mean? Are we seeing some kind of fundamental reset of global trade flows? Or is this more tactical, maybe short-term protectionism by nations trying to get an edge? Let's start with the U.S.-Korea negotiations. South Korean President Lee has signaled that these ongoing talks are likely heading towards a rational outcome, was the phrase used.
Rational outcome. Diplomatic language.
Indeed. He confirmed the talks cover some pretty heavy stuff, though. Visa normalization, nuclear reprocessing rights, and defense cost sharing.
Yeah, those aren't minor points.
Definitely not. They're core to the relationship, with big implications for security and economic stability in Asia.
Absolutely. These discussions are strategically vital for both Washington and Seoul, and the ripples go far beyond just those two. Visa normalization, for example, could unlock crucial labor flows, especially in strategic industries. Nuclear reprocessing, well, that's got huge security implications in a volatile region. And defense cost sharing directly affects the military burden, operational readiness, regional stability. So that rational outcome, President Lee mentioned, it points to maybe a pragmatic push to strengthen a key alliance in a really complex environment.
Okay, and here's where it gets really interesting, perhaps a bit complicated. President Lee also cautioned that Korean firms might, hesitate on future U.S. investment. This follows some recent immigration raids.
Right, I saw that.
But then there's this other detail. President Trump apparently stepped in, halted deportations of some Korean battery plant workers, and even offered them the option to stay and train American staff.
Wow.
Yeah, that certainly muddies the waters a bit, doesn't it?
It absolutely does. And it raises a really important question, I think, about that delicate balance between, say, domestic immigration policy, the need for foreign investment, and broader national interests. I mean, on one hand, you have immigration law enforcement. On the other, you've got these strategic industries that rely on very specific skill sets. They offer to train American staff. Well, that looks like an attempt to bridge that gap, maybe. Prioritizing economic continuity while still addressing the immigration side is a heck of a tightrope walk. Really shows how internal policies can smack right into international investment decisions.
Yeah, fascinating dynamic. Okay, shifting south now. Mexico. Mexico's economy ministry announced a pretty sharp tariff hike. They're raising tariffs on cars and auto parts from Asia, especially China. Quite significant.
Oh, significant.
Rates jumping from 20% up to 50%.
50%.
Wow, that's a big jump. That's textbook protectionism right there.
Seems like it. Mexico's clearly trying to shield its domestic producers from what they see as surging foreign competition, especially that influx of Asian, specifically Chinese cars and parts. The potential ripple effects here could be substantial. I mean, this could reshape global supply chains for the whole auto industry. Manufacturers might have to completely rethink production, export strategies. This is definitely going to strain trade relations, particularly with China.
You'd think so.
And it kind of signals this growing trend, doesn't it? Nations using trade barriers more aggressively to prioritize domestic industries.
Okay, moving beyond purely economic policy now, though it's all connected, isn't it? The geopolitical landscape, it just keeps grabbing headlines, driving global anxieties. It feels like this constant undercurrent in almost everything we've talked about today. Just reminds you how deeply intertwined it all is.
It really is the backdrop to everything else.
So, starting in the Middle East, tensions are definitely described as elevated. This follows those Israeli strikes in Qatar that unfortunately killed Hamas members. And Qatar, in response, condemned Netanyahu's threats and, quite significantly, said it's reassessing its mediating role in the region.
That's potentially huge. Qatar's role as a mediator has been absolutely crucial, trying to de-escalate the Gaza conflict, facilitate hostage talks. If they really do step back or significantly change their role, well, that could remove a key diplomatic channel, make finding any resolution even harder. And adding to this already complex picture, the U.S. Pentagon just approved, $14.2 million in military aid for Lebanon?
Yeah, aimed at boosting their armed forces' capacity to dismantle Hezbollah infrastructure, specifically.
And Doha is hosting an emergency Arab Islamic summit this weekend. That'll be a critical forum for diplomatic action, but goodness, the path forward looks incredibly fraught.
Absolutely. Okay, turning to Eastern Europe now. The UN Security Council is set to meet Friday to discuss Russia's violations of Polish airspace.
Another violation.
Apparently. Poland, Ukraine, and Lithuania put out a joint statement. They called this latest drone incursion an unprecedented provocation.
Yeah.
Clearly, they're not taking this lightly at all.
And they shouldn't. Airspace violations, especially in a region already on edge like Eastern Europe, are incredibly serious. They represent a significant escalation, a direct challenge to sovereignty. And they always raise that specter of miscalculation, don't they?
For sure.
That joint statement, the urgent calls to bolster air defenses across the region, it just underscores how serious these incursions are and the growing need for better security. These aren't just isolated blips. They feel like tests of resolve, tests of international norms.
And how's the EU responding to these ongoing tensions?
Well, they're making some firm moves, significantly increasing sanctions against Russia, and also vowing to accelerate the phase-out of Russian fossil fuels.
Okay, that certainly sounds decisive on paper. Escalated sanctions plus the energy shift. The aim is clearly to hit Russia's economy hard, limit its ability to fund military actions, right? And at the same time, push the EU towards greater energy independence. Makes sense strategically.
It does. But, historically, how effective have these kinds of dual-pronged sanctions and energy shifts actually been in changing a major power's geopolitical course? It's often a long game. The short-term pain for the sanctioned nation often gets weighed against what they see as long-term strategic goals. It's not always a quick fix.
True. All right, let's turn finally to Asia. Some complex dynamics there, too. South Korean President Lee emphasized that even though North Korea's response to outreach efforts remains, well, cold, easing tensions is still very much in Seoul's interest. He also noted, interestingly, that U.S. President Trump probably holds the strongest influence over Pyongyang's stance right now.
Yeah, that really highlights the intricate diplomatic dance around North Korea, doesn't it?
Yeah.
Seoul wants engagement, but the path often seems to run through Washington, just underscores that enduring U.S. influence. And if we connect this to the bigger picture, Kim Jong-un is also believed to be strengthening ties with China. There's an expectation of more, let's say, unofficial trade between them.
Right.
So you've got this complex web of alliances and influences, Pyongyang trying to leverage its relationships with both big powers, playing them off each other maybe to maintain its position and get resources.
Always a complicated picture with North Korea.
Always.
And elsewhere in Asia, specifically Southeast Asia, there's a fresh dispute. The Philippines has formally protested Beijing's move to create a new nature reserve near Scarborough Shoal. They're demanding China withdraw the measure, respect Philippine sovereignty.
Ah, yes, Scarborough Shoal. That's a classic example, really, of these ongoing, simmering territorial disputes in the South China Sea. These aren't just local spats. They have much broader implications for regional stability, freedom of navigation, international law. Each move, like declaring a nature reserve, is seen by one side as asserting sovereignty and by the other as a provocative infringement. It just keeps tensions simmering and challenges the established global rules. These seemingly localized disputes are really battlegrounds for influence, control over vital shipping lanes, resources. It's high stakes.
Wow. What an incredible tour through the interconnectedness of our world today. It really hits home. We've seen how cautious financial markets are, driven by what central banks might do, that ECB decision, the crucial US CPI print, and how that ties into geopolitical risks, strategic trade shifts like Mexico's tariffs, those complex US-Korea talks, and then navigating those simmering tensions everywhere in the Middle East with Qatar's role, Eastern Europe's airspace issues, the sovereignty disputes in the South China Sea.
It really does reaffirm that none of this happens in a vacuum, doesn't it? These aren't isolated events at all. They're all threads in this huge global tapestry, constantly pulling on each other, influencing each other. And understanding these dynamics, seeing the connections, it's just invaluable for making informed decisions, whether you're involved in markets, policy, or honestly just trying to understand the daily news in the world around you. This global pulse, it affects us all, often in ways we don't even realize at first.
So what does this all mean for you listening in? Well, we really hope this deep dive has given you a clearer, maybe more thorough understanding of these complex, interconnected global events. Hopefully saved you some time, maybe sparked a few aha moments that help you make sense of it all.
And maybe as you go about your week, just consider how these events, even the ones that seem distant, ripple through pretty much every aspect of our global economy. Here's a thought. Which single thread from everything we've discussed today, which one do you think will most define market sentiment or maybe geopolitical focus heading into next week?
Ooh, that's a great question to ponder. Thank you so much for joining us on this deep dive. Keep exploring, keep learning, and we'll connect again soon.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.